Welcome back, and now let's get started. I told you before now that we will review reports of select companies. We'll start with Unilever Nigeria. We're looking at the half-year 2020 report. And for United Capital PLC, we're looking at the half-year 2022 report. For FGN Cocoa Processors, we're looking at the second quarter 2022 report. For Triple G and Co PLC, we're looking at the first quarter 2022 report. And for PZ Cussons Nigeria PLC, we're looking at its unaudited full-year report 2022. For Africa Prudential PLC, we're looking at a half-year 2022 report. And I will begin with Unilever Nigeria PLC. And looking at Unilever in revenue, 2021, they had 32.41 billion naira. And then in 2022, they had 43.81 billion naira. The percentage change there is 35.17%. For profit after tax in 2021, 704.78 million naira. And then in 2022, 1.91 billion naira. And that's over 100% change, 169.01. Looking at the EPS, that's the earning per share, it was 12 kobo in 2021, and in 2022 it was 33 kobo. Then looking at the profit margin, 2021 2.19%, and in 2022 4.36%. I'd like Mr. Dario Ogbe to start the analysis of those particular results.
All right, if you look at the revenue, it's a very wonderful one. But even though you have looked at, if you take your time to look at the results, you realize that their cost is always growing above. And if you check the percentage growth, is something that calls for caution. Yeah. So even though they are releasing this wonderful result, I think they should also work on their costs, because if you begin to check the ratios, you realize that it's getting on the high side. So I think the major thing I think we should watch out for, how the management of Unilever should watch out for, is the cost. They need to work on their cost so that it will not be a eventually have a negative impact on their results.
Okay, thank you so much. Mr. Aruna, if you're there, we'd like to have your thought, if you can hear me. All right, I guess we lost connection there. Okay, what's your thought?
Yeah, for me, like I said earlier, stock market is a good indicator at any given time, but it's not existing outside of any economy. That means economic expansion and contraction has a way of affecting companies operating in that domain or in that environment. Like what Kude just said, already is experiencing contraction in the economy. Yes, we see the top line was very good, attractive, but the bottom line is what is slimming down. In between the top line and the bottom line, cost of business, cost of sales, cost of everything has increased, cost of finance has increased. As Tunde just said, the cost of finance for Unilever moved from 42.5 million to 626 million naira. You can see the growth in terms of cost. This has the way of eating into companies for profit. At the end of the day, they produce number that is not enough to support the price. That's why if we see such environment happening, you as an investor, there's always also companies in this same contraction the economy we're seeing now already that will do well. You see that in a such position of such company that you are seeing that the numbers are not likely to support the price going to the future. What you do, what we call sector rotation, you start moving to sectors or individual stocks that has the capacity of sustaining their earnings in up direction. At the end of the day, the Peter I said, in any investment, we have what we call growth stock and value stock. And when you are raising your rate, the growth stock are about what to start declining because they won't support what growth. But those value stock is where we put them because they have stable earnings and all to support them. And that's how to invest as an investor.
All right, thank you. Mr. Garuba, let's have your thoughts before we move on to you, Cap.
Well, I think Unilever is restoring back the confidence that the investor had on it. If you remember in the 2000s, when you are talking of blue chips, Unilever is among the blue chips company we had. And I remember a time that we were trading Unilever at 14 naira. Suddenly it come back to 28. And it went as low as 10 naira. Now with this performance, and when you look at the growth in both the turnover and the growth in the profit, it will give you the confidence if it continues, even within this year, the price can go much higher beyond 20 naira, if they continue with this rate.
All right. Thank you so much. Now, looking at UCAP, we have in 2021, the revenue was 6.85 billion naira, and in 2022, 9.11 billion naira. The percentage change there is 33%. And for profit after tax, 3.14 billion naira in 2021, 4.44 billion naira in 2022. And then the percentage change there is 41.4%. The earning per share 2021, 52 kobo. 2022, 74 kobo. And now the profit margin 45.84%, 2021, and 2022, 48.74%, if impressive had a name. All right, let's have your thought.
For me, as an investor, you look at what is happening in the economy, I really insist on it. When it comes to financial market, those in the financial market can switch from one product to the other easily. While those in risk sector, the real economy cannot move easily. Nestle cannot stop going to produce let me say it, go stop produce cement the next day. But for those that are in financial market, you can move from fixed income to equity. And being a company that is vast in these two markets, they are involved in fixed income. They are involved in equity market. And equity market get to data return almost 22%. And also, as we're seeing interest in fixed income, this company was into financial product. That means this number was seen for me is impressive and going to sustain for investors that are designing, or traders. This is the right time to look at UCAP, because pulling back to around 12 naira or even 11.90 for me is an attractive point for you to position, because they can always switch in between the market. They are not going to be a loser at all. Also, if you look down to their cost of operation, the way it will hit the manufacturing sector is not the way it's going to hit this company. It's open by 8 o'clock and closed by what? By 5. And other companies that were running just to do all their business, if you look at even the cost implication for UCAP, look at it's very minimal growth I saw in that, because that means they're able to manage their costs, and that is why you can see their the profit margin moving from 45 to 48. That means in every 1 naira, gross earning they have, they retain about 48 kobo as profit. For me, this is a well managed and a well-run company. For that, as an investor, look the way of UCAP.
Okay, investors, look the way of UCAP. Okay. All right, Aruna, if you can hear me, please confirm if you can hear me.
I can hear you.
Powerfully. Now, I would like you to comment on this particular result. That's the UCAP result. Can you hear me? All right, I think I'll have Jario react on this. All right, please go ahead. Jario.
All right, to me, I've taken my time to look at UCAP, their results, and there's nothing you can say than to commend them, because they have been very stable in their growth.
Yeah.
If you check all their key indices, they grow them steadily. They manage their cost very well. And as far as I'm concerned, this stock should be valued more than what it's actually doing now. So to me, as an investor, I'm there. If I have more money now, I'm going to buy more of UCAP, because I am sure that any company that can do this in this economy is a company to work with. But let me just establish this. It's high time, with this interest rate hike, it's high time most companies, especially the manufacturers, start looking at how to get a cheaper funds. And I believe that's why some companies like Dangote and some of them are now coming up with bond, because it's a cheaper way to raise fund. If any company that's still relying on taking loans at this high cost, we find it very difficult to report a profit for their shareholders.
Oh, that's very good. But of course, for people who probably do not understand all of these things, can you in few seconds explain the difference, between the bonds and then the loans?
Let me just use it this way, that the bond holders are like debentures. It's like you are borrowing the company some money at a very low rate.
Exactly.
That's the difference. Unlike the shareholders, we are ordinary shareholders. So when the company is not doing well, and ordinary shareholders suffer along with them because they are co-owners. But a debenture will collect his money. So that's the major difference. So when they are doing the bond, you can actually, if you have enough fund to go along with, you can be part of it also.
Just to add to what they just said, just very simple. He said it's just low interest rate. For now, to speak now, because inflation is rising, CBN is increasing rates. That means that is the minimum benchmark, let's say 14%. I mean, when banks at their own, it will go as high as 26, 28. And
that's a lot.
And also, if you go for bond, you have 12% bond, and you go for 5 years. It's not going to tomorrow it becomes 15%. Is that 12% going to pay for throughout that period? Already you pay twice in a year, every 6 months. Fine. For me, I think it makes sense. I can see companies that are smart are looking that way. Even your cap will just mention Dangote, MTN. They know why they are looking at. They are not going to the bank because they know that as far as inflation keep on rising, CBN will continue to adjust rate. Because this is the highest rate we have seen in Nigeria, 14. We don't know whether for the history of Nigeria, 14 has been the highest. Whether it's going to sustain again, we don't know. Because if you meant increasing rate to fight inflation, that means it's going to go up. But I believe that this is the time to look away from only interest rate. Look for other things that will encourage the economy. Because the more interest rate, the more we are kind of deflating the little growth we are seeing.
All right, very quickly, let's move on to FTN Cocoa. But I feel we should still get Aruna's thoughts. Aruna, can you hear me? Mr. Jimo?
Yes, okay.
Okay, Mr. Garba, let's have your thoughts.
Right. For me, UCAP have done very well, but I want them to do more. In view of the fact that, yes, in view of the fact that last year they paid 1 naira 50 kobo, meaning that their earnings should be above that. If you take 74 kobo earning for half year times 2, it will give you less than 1 naira 50 kobo, and that will be below the dividend they have declared the previous year. But we hope things will change for the better, and they will move and give out the confidence that they can sustain that 1 naira 50 kobo. If they do so, their price will remain the same or even go higher than what it is today. But we can help them because this is a subsidiary out of UBA, and today UBA is trading less than 8 naira, and this is trading 150% of their parent company. And for this, we say the market have rewarded them, and we have seen the changes, and we want that change to continue. Thank you.
All right, thank you.
Just to add to what
in split seconds.
Just a second. If you look at the history of UCAP, they have their result, the full year always come with a good number. That is where if you look at last year, they had off 52 kobo as at Q2, but at the end of the year, they almost surpassed 150 kobo, almost 180 before they paid that. That means with this number, we expect that since they have a pattern of earnings reporting, we believe that that final year was a support. Like what you just said, it made a lot of sense, but we expect that since they have a pattern of releasing a number that is beyond expectation in the last quarter of the year or the third quarter, we expect that they will meet up and pay 2 naira or 180.
Oliver the twist.
All right, let's check FTN Cocoa now. And then for FTN Cocoa, the revenue in 2021, they had 127.01 million naira. And then in 2022, 16.77 million naira. That's minus 86.69% change. That's in the negative. And then loss after tax, minus 689.66 million naira. That was 2021, and in 2022, 169.77 million naira. The percentage change there is also in the negative, minus 124.62%. And then for loss per share, minus 31 kobo, and that's what we have there. Then also looking at in 2022, it was minus 8 kobo. Who starts this conversation? Jerry Obi.
Well, if you look at these results, at the top is discouraging. At the bottom, well, you begin to feel maybe they will do better. But the fact that their turnover is that low, over 80%, point to the fact that they are not doing business as usual. So something needs to be done. Although at the bottom, we realize that they have made some profits that erased the good portion of the loss point that they've been reporting before. But again, with a low performer, with little activities, I don't know what their strategy is, because it's possible that they are shelving away some transactions so that they are only looking at transactions that will give them profit. Maybe that's why we have that deviation.
Yeah, because looking at the revenue in 2021, 127.01 million, and then in 2022, a paltry 16.77 million.
So that's why I'm saying that perhaps it could be a strategy from them, but it's cause for caution. we should be seeing positive. That's what investors want to see.
Exactly.
So now that the thing has been raised that low to 8 kobo, we want to believe that the next result, we won't even see anything. They will start reporting a positive numbers.
Okay.
All right, so let's have
The
you.
truth of the matter that this company is showing you is dying. Because I doubt much if they are in operation.
Okay.
How can you move from 127 to 60 million? Are they really in operation?
Exactly,
I need
sir.
to visit this company before I further comment.
I love that, sir. You know, there are some companies on the exchange that are in this category that even the regulators should ask questions. You can't be posting red, and you know, you need to ask. Because people working there are earning salary, they are not just sleeping. We need to find out also in a way that they can assist in terms of strategy and all those stuff. Things that time the regulators should also.
You know, sometimes
this- okay.
if you look at some things that they do, it could be that they have some activities that give them a lot of losses.
Okay.
You know, the story of UACN and the properties.
Yeah.
At a point, they cut off from the property
Affect their business.
so that we can start seeing positive. It's possible that what has happened in this company is that they are sharing some activities that are not profitable to them. It could be the reason why we are seeing this low revenue. But let's follow it up. Let's see another result from them before we can start criticizing them this much.
Okay.
But let the truth be told, they are doing cocoa processing. and cocoa is still exists. And others are doing very well. So why are they not? Are they in operation?
That is
Again,
another
I need
question.
to visit this company to know if they are in operation.
All right.
Yeah.
Thank you so much for your thoughts. And very quickly, Mr. Jimo, let's have your thoughts before we move on to Triple G. All right, I guess we lost connection with him. Very quickly, let's look at Triple G. We're looking at the first quarter here. So for Triple G, revenue in 2021 was 256.87 million naira, and then in 2022, 476.37 million naira, and that's 82% change. I guess that's that needs to be corrected. It's 2%. And then for profit after tax, we had minus 62.47 million naira. That was in 2021. And then in 2022, 2.40 million naira. That's over 100% change, putting it at 104%. For earning per share, it was minus 5 kobo in 2021. Of course, when you look at the profit after tax, that tells you why it was in the negative. And then in 2022, 5 kobo. Mr. Garuba, let's have you start the conversation on this one.
Well, it's a focused company, but remember the pioneer, the giver, since he passed away, the company went into a coma, but now it's awakening. Maybe they have changed their strategies, and we hope for the better. And it shows you that Triple G will come to the bounce back. But don't forget that in the past, they were producing checks for the banks, and now we're in electronics.
Yes.
Nobody uses checks.
Checking.
And therefore, they have to change their strategies because the product that they are known to, people are not looking for it, the dividend warrant. Nobody asks for dividend warrant. So you see, they are in the industry that is dying. They have to change strategies. But with this turnover, it gives me the confidence they have got it right. And if they continue, the sky is their limit.
Okay, that's hopeful.
Yeah, but also, like I always tell people that when a child performs well in school, you know, you always sit at the door to wake up the dad. You know, a Triple G has been in the red for a long time. Now they've turned positive. You know, first quarter result just came earlier. As well as I say, you want to tell us you have done well, but like you said, let's keep our finger crossed and see their subsequent result to really comment on what they are doing.
Correct.
Okay. Okay, very quickly, you agree with him or you want to say
I
something?
agree with him, but you know, in the 90s, this Triple G is the toast of the market.
Yeah.
Everybody are looking at them, but like Araji rightly said, the truth is that they should diversify. There's need for diversification. You should look out of what you are doing. But again, I've not taken my time to look at this result. It could be that they are engaging in some other businesses, but I've not done that. If I look at it, we'll be able to say if actually what is bringing this positive number is the fact that they have diverted. They have been looking at other business that can give them better profits.
All right, thank you. Let's look at PZ, the unaudited full year result 2022. And when we look at the revenue in 2021, it was 82.58 billion naira, and in 2022, 100.04 billion naira. The percentage change there is 21.15, while the profit after tax in 2021 was 1.70 billion naira, and in 2022, 6.40 billion naira, and the percentage change there is over 200. It stopped at 277.45%. Earning per share in 2021, 56 kobo, and in 2022, 1 naira 61 kobo. Profit margin in 2021, 2.06%, and in 2022, 6.40%. Ambrose, let's have your thought.
Yeah, for me, I would say good number, but like I was saying when we're analyzing the Unilever, if you look at the top line, good. We're moving from 1 point something to almost getting about 277 growth. Say that there's what we call extra income form of what selling of assets or to support the number, which is what push the bottom line up to that level. But if you go back also look at the profit margin, it's still very small. For me, it's not encouraging. But because of this one item, it's not going to be sustained in other years. Yes, investors should be very careful. You can take the advantage of this increase in their earnings, because we expect with this earning per share, dividend of 50 kobo or 70 kobo can come from them. But for me, if you are really in this stock, you have to watch very well, because after this this number, subsequent one, will they maintain this performance, knowing that the manufacturing sector are being hit with this increased interest, and also cost of fund and cost of of raw material, cost of production. I believe that for me it's a good number for now. I think the future will tell. But for those that are already in this stock, wait to see their final result, because with this number we expect a good dividend to come from them, because also they have foreign players to the company. All these foreign investors, they want dividend to increase their stake in anywhere they are, since they can have access to take this fund out. Once you pay the dividend, they buy back the stock to increase their stake. Especially you can see it in what's happening in Nestle and other for me.
All right, very quickly, let's move on to Africa Prudential Plc. We're looking at the first half-year result. Looking at the gross earnings in 2021, 1.67 billion naira. And in 2022, 1.99 billion naira. Looking at the percentage change, 19.16%. Profit after tax in 2021, 827.64 million naira. In 2022, 935.78 million naira. Percentage change there is 13.10. Earning per share in 2021, 41 kobo. 2022, 47 kobo. And then the profit margin 2021 was 49.11%, and in 2022, 47.23%. Mr. Garba, let's have your thought. If you can hear me, Mr. Garba. All right, Dario, but let's have your thought on this result.
Now, this, if you look at it, without just look at the EPS and all that,
line, yeah.
you want to say that it's a poor performance. But again, if you take your time to look at their book, you see that this company, they are doing some level of diversification. You see that they reported something like a digital economy income, and it grew about over 355%, meaning that they are actually looking at other ways of making income. And you agree with me that when a company is investing in new business, you can see this kind of numbers, because they're actually doing moving some fund from one place to the other. So I want to believe that with time, we are going to see African Prudential back standing on its feet.
All right, let's have your thought. And just to be like what you said, okay. Mr. Garba, go ahead.
I want to make a comment on this industry. You see, this industry registers activities. It doesn't exist in UK. It doesn't exist in US.
All right, I guess we're unable to hear him. Network right there. Please go ahead, Mr. Ambrose.
No, I believe that the business of registrars are gradually going down. And like students just said, if Africa Prudential is diversifying into other business, we are going to digital world already. every company is going digital, even the economy, global digital. Even if you look at the last MPC meeting, we're talking of how we can drive economy through digital growth. If we're seeing company taking that initiative, already you can see the kind of return growth from the previous year to this one, about 300% For me, it's a good one. We want to see more of this. But for me, I would say this is a missed number for now. Not a totally bad number. A missed number that investors should have hope. And they constantly maintain their 50 kobo. But if there's improvement in earnings, we might also see a better dividend. This is a company that even started better than UCAP. But now UCAP, I believe that they also find a strategy to come back to their position.
Okay, if you can hear me, Alaji, Africa Prudential began the year with a share price of 6 naira 35 kobo, but it has since lost 11% of that price valuation to stand at 5 naira 65 kobo, and that ranks it as the 125th on the NGX in terms of year-to-date performance. What are your thoughts on this?
It's an industry that is a dying industry. If you look at the developed country, UK, there is nothing like registrar.
Yes.
What we have is central depository. And also, acting as a registrar to the company, you see that the central security is the one that does it. So the earlier they diversify and get other business, the better. Because it's just a matter of time. Today, we have federal government scoop, we have federal government saving, they are using CSCS as their registrars. CSCS as their registrar rather than using registrar as registrar. And this will eliminate the issue of unclaimed dividend, the issue of unverified share, and so many issues will be eliminated if you use the central depository as the key. They need to think twice.
Yeah.
Okay. You want to react to that?
No, you just said it. I would say that in advanced country, you don't see registrar. You do with the central deposit system. You get in here. All this unclaimed dividend in Nigeria that SEC is doing, that federal government taking opportunity to take convert it into a holding trust is because of this registrar. Most of them are the one causing, because if you go there for the one reason or the other, now it should start sitting up, because like Elijah said, as things start unfolding, technology is up here. They might one day say there's no registrar again. They can pay from CACS. That means they need to do like what Africa Prudential has done now by diversifying. They will do more. I remember, even though, because about 2 years ago, I was in a meeting where they were rolling out their 5 years plan. When they want to, I saw a lot of them, but when the result came last year, I didn't see impact. I tried to report. If now we're trying to awake their plan and move direction, it's a good one for Africa Prudential. But investors should know that once you are investing, always keep an eye on your market, because once certain numbers changing, because I tell you, price feed on earnings. If your earnings is not coming up to support the price will remain either down or flat. That is why.
Generally, the market will revalue you.
Yes, exactly.
It's what you do that they will value. Even though we see that you are doing something, we will just revalue you and wait for to see the effect. Because again, if you look at it, the business of registrar is what they are good at doing. But for now, they are looking at other sector, digital business. So we need to see if they will actually be as good in digital business as they were in the registrar business before we start revaluing them.
Yeah.
Okay, that's a good one. Well, I remember when we're talking about the oil and gas index, you had something to say about it. I think we can just...
I just want to say that I agree that they are good fundamental stocks. I agree that investors should consider them now. But again, I want everybody to know that this is a sector with a lot of challenges, and they are usually affected by policies. So if you are in any of them, you should not go to sleep. You should put your ears to the ground.
Okay, thank you so much. Well, before we wrap up, I'd like to have your final thought. Mr. Garba, please talk to us. What's your final thoughts? What's your advice to investors based on the conversations we've had today?
My advice to the investors, they should call their holdings, because half-year result is not yet clear, and we are expecting some good news as from what we have seen, and therefore wait for the next 2 weeks. I believe that most of the stock are likely going to restore their price back. Thank you.
Okay, thank you. Let's have yours.
Yeah, I will tell you that at the end of every trading day, it is the buyer and the seller that decide the price of the stock. That is why, as a trader or investor, you know how to combine your fundamental and technical analysis at any given time to make what informed decision. All
right, and finally,
I just want to say investors should beware of panic selling. It's not so bad in the market. we should understand the market is designed to go up and down. So when it's up, you take the advantage. When it's down, you also take the advantage. So selling out of the market now or rushing out of the market could be a step that one will live to regret in the future.
Thank you so much. This is a good place to end the show, and we've had quite enlightening and informative conversations today, and we can't wait to see your investments soar, because that's why we're here. Many thanks to our analyst, Ambrose Omodion, the CRO, Invest Data Consulting Limited. Thank you for coming on the show.
Thanks again.
And of course, Jari Ogbetunde Shegun, independent stock market analyst with TradeLines.biz Investment Limited. Thank you for coming.
You're welcome.
All right, and virtually we were joined by Mr. Kurufi Garuba, the MD, APT Securities and Funds Limited. Thank you so much for joining us.
Thank you for having me.
All right, and earlier we had Aruna Kebira Jimo. He is the Managing Director and CEO, Global View Capital Limited. Well, thank you for also joining us. He had to be excused at some point. All right, many thanks for joining us today. Until we see you again, I remain Perpetua Fasami Peter. Bye for now.